Welcome back to Insured A.F, Accurate and Factual, where we guide you through the maze that is health insurance in the US. My job is to make sure you don't get lost. Think of this as your map. Nobody reads maps anymore, so think of me as Ariadne guiding you through the labyrinth. If you know your Greek mythology, you'll get that later. I'm McGarrity, your string-holding, map-reading guide, here to lead you through the health insurance labyrinth. Here we go. Everyone loves a discount until they find out it's temporary or they find the string that's attached. That's basically how health insurance subsidies work. They can save you thousands of dollars every year or cost you thousands at tax time if you don't understand how they work and when they don't. So today I'm breaking down what a subsidy actually is, why they exist, and why being honest about your income, or even slightly overestimating it, might save you a huge headache later. Let's start simple. A subsidy is not a coupon. It's not charity. It's an advanced tax credit. The government pays part of your premium every month based on the income you told them you expect to make. That's the key word, expect. If you tell the system that you're going to make $50,000 and you actually make $60,000, that extra $10,000 changes the amount of subsidies you're eligible for. Basically, you were paid too much towards your health insurance. And guess what? The IRS wants their money back. On the flip side, if you were accurate or even overestimated a little, you'll either owe nothing back or you might even get something back at tax time. That's why I always tell clients it's better to play it safe and aim high on your income estimations. Subsidies exist to keep the system stable. If only sick people could afford health insurance, premiums would skyrocket. So subsidies act as a balance. They pull more healthy people into the system so that everyone's costs stay somewhat level. It's not perfect economics, but it is what keeps the entire ACA marketplace running. Now, as of this recording, some of the expanded subsidies that were added during the pandemic are set to expire for 2026. Here's what that means in real life. In 2021, during the pandemic, the government temporarily made subsidies more generous, so more people could afford coverage. So even middle to upper income families who didn't qualify before qualified for subsidies. When those temporary boosts end, December 31st, 2025, many people who have been getting help will no longer qualify. This creates what's called a subsidy cliff. Think of it like this. Right now, if you earn just a little more, your subsidy gradually goes down like a slope. But starting in 2026, that slope turns into a cliff. If your income goes $1 over the limit, you don't just lose part of your subsidy, you lose all of it for the entire year. This is not a small thing. For some families, it could mean hundreds of dollars more every month for the same health plan that they currently have. So subsidies do work. We've seen it for the last few years, but maybe not anymore for everyone. Here's where people get burned. You start the year estimating your income at a certain level. Maybe you're self-employed, you work commission, or you get a raise mid-year. Suddenly, your income jumps. But the marketplace subsidy doesn't update unless you tell them about it. So then, tax time hits, and surprise, you owe back thousands because you didn't tell them that something had changed. I have seen this happen more times than I can count. Or maybe your spouse gets access to an employer plan, and it's technically affordable on paper, even if it's terrible coverage. Under the ACA rules, the Affordable Health Care has to be compliant. The plans that they offer have to be compliant with the Affordable Health Care, and if they are, you don't qualify for any subsidies. It's what's called the family glitch, and it traps thousands of people every year. On the flip side, if your income drops too low, you could fall into Medicaid eligibility, which sounds fine until you find out your doctors don't take Medicaid, or it doesn't cover your prescriptions, or you live in a state that never expanded it, which means it takes more than just low income to qualify. So subsidies are helpful, but they require active management. You can't just set it and forget it. It's important to understand that the marketplace doesn't double check your income every month. They take your word for it until the IRS reconciles it on your tax return. That means that honesty is everything. Overstating your income by a little bit means you might pay slightly more each month for your health insurance, but avoid a massive bill at tax time. Underestimating it to get a cheaper plan is like borrowing money from the IRS. And trust me, that is not a loan that you want. Despite all of the traps, subsidies are the reasons that millions of Americans have coverage at all. Without them, family premiums could easily double overnight. They're not free money. They're a tool, a way to make healthcare accessible while the system tries to balance itself. But like any tool, if you don't use it correctly, you can get hurt. So subsidies aren't a scam, but they're not magic either. They're a temporary fix in a permanent mess. And if you don't understand how they work, they will eat you alive. If you want help to make sure your subsidy is accurate, or if you're tired of playing IRS roulette, hit subscribe and grab my free coverage checklist at McGarrityLLC.com. You can also find my workbook on Amazon, the health insurance workbook, that helps you determine what plan is best for you, what works, what doesn't, and you can put down all of your doctors, all of your prescriptions, and have everything in one place for the whole year. I'm McGarrity, and this has been Insured AF, Accurate and Factual, where we help you to be prepared, not panicked.